there, good morning. You're watching Market Cafe and this is ET Now. Now, this is a show where we take you through all the important global updates that we've been tracking for you overnight, all the important global stories, how the markets abroad have looked and how they have closed overnight, as well as how the Asian markets have opened up this morning. In the second half of the show, we'll also go domestic and focus on the stocks that could be potential buzzers in today's trading session, as well as the stocks that brokerages are keeping on their radar early this morning. So, well, let's kickstart the show then, and let's start by looking at what the US markets have done overnight. Now, US futures rose on Thursday night. However, during Thursday's regular trading session, Nasdaq shed 1.7%. That's the biggest loser coming in over there. The action comes after the index slid into correction territory on Wednesday. The Nasdaq is now down more than 12% since its high close for the year in July. The S&P 500 ended the day 1.2% lower, which is 9.8% off its closing high for the year in July, and teetering dangerously close to that correction territory as well. Dow shed 250 points, or 0.7%, seeing its sixth negative session in 7 days. On a weekly basis, however, the Dow is down about 1%, S&P 500 off about 2%. Nasdaq is the biggest loser over here, coming down about 3% and is on pace for its third straight losing week. So, well, that is what the US markets have done in after-hours action. Amazon added nearly 5% after the e-commerce giant trounced analyst expectations for revenue and earnings in the third quarter. The Ford stock, however, dropped 3% after the company missed its third quarter earnings expectations and pulled its guidance for the year, citing a UAW strike. Investors are looking ahead to what could be the next catalyst for stocks on Friday, the personal consumption expenditures reading for September. This is an important metric to watch out for. The PCE is the Federal Reserve's preferred inflation gauge. Economists are calling for a core PCE hike of 0.3% in September, a year-over-year increase of 3.7% according to Dow Jones. In terms of earnings, you've got Chevron and ExxonMobil that are set to report earnings Friday before the bell. So, well, this is what the US markets have done. This is on the equity front. Now, I'm also joined by my co-anchor Harsh Saita. Good morning, Harsh. Well, this is what US markets have done largely when it comes to equities. Take us through what oil and other commodities did overnight.
Well, right, Snehi. So, equity is clearly seeing a bit of a correction that we've seen through this week. In fact, both the S&P very close to correction territory. So, that's where we're at, where equities are concerned. Quickly on to crude. Crude doing the exact reverse. What crude continues to do is build on those gains that it clocked in yesterday. And that's because the situation from the Middle East perspective doesn't seem to be improving in any way. It seems to be holding up quite strongly. The escalation seems to be well underway, and therefore what you're going to see is more pressure on oil prices till this cools down. So what we're seeing on WTI is it's above the $83.5 a barrel mark, Brent above the $88 a barrel mark, very close to the $88.5 a barrel mark. That's where we're at where oil is concerned. You're seeing the US dollar also at 106.5. So despite oil rising, we're also seeing, or rather despite the dollar rising, we're still seeing the oil prices continue to rise. Where bond yields are concerned, we're seeing that just below the 4.9% mark where the US 10-year bond yield is currently at. So a little bit of a flip-flop that we're seeing on the US 10-year bond yield as well, which determines the dollar index, just for context. Quickly moving on to alternative assets, gold just below the $2,000 an ounce mark, and that's where we left it yesterday as well. So that's with regard to commodities, the bond markets, as well as where the dollar index lies.
Absolutely, and also when it comes to Europe, the European Central Bank has held rates steady after 10 consecutive hikes. On the back of that, you've also seen DAX is down by 1%, FTSE down 0.8%, Stock 600 also down 0.5%. So, well, largely global handover looking very weak. Shifting to all the cues that you need to be keeping on your radar for today, when it comes to earnings, well, we've got a host of earnings today. It's going to be a busy day for us, Harsh, today. When it comes to the Nifty pack, you've got Dr. Reddy's, Bajaj Finserv, Cipla, Maruti Suzuki, SBI Life Insurance, BPCL, and also the big boy Reliance will be reporting its Q2 numbers today. So, well, lots of data to watch out for today. When it comes to corporate action, then you've got Aztec Life. The board will mull higher limit of debt issue today. IHCL, the board will be meeting to mull issue of shares today. And M&M Finance and SBFC Finance will mull fundraising today. So lots of important cues to watch out for. Also, when it comes to the primary markets, then you've got the Blue Jet Healthcare IPO. Today is the last day to subscribe for that IPO. It will close for subscription today. So, well, all of these cues watch out for in today's trading session.
Well, absolutely. Those are all the cues that we need to watch out for. But quickly on to the global news front on the geopolitics side. Day 20. Still no respite between the Israel-Hamas war. Israeli tanks in Gaza made an overnight raid in Gaza before withdrawing in what it called the biggest incursion of the current war. The war so far has claimed over 7,000 Palestinian lives since the war began, and the UN General Assembly begins an emergency meeting in Gaza with a vote on the Jordanian draft resolution, which is expected today.
Meanwhile, the foreign ministers of the United Arab Emirates, Jordan, Bahrain, Saudi Arabia, Oman, Qatar, Kuwait, Egypt and Morocco have condemned targeting of civilians and violation of international law in Gaza, which has been under Israeli bombardment. And in a joint statement, they mentioned that the right to self-defense does not justify breaking law and neglecting the rights of Palestinians.
Right, China state media has reported that former Premier Li Keqiang has died of a sudden heart attack at the age of 68. The former Chinese Premier and head of China's cabinet served under President Xi Jinping for a decade from 2013. Li ended a 2-year term as Premier in March.
Well, shifting focus to the US then, and what could make the Fed's job more difficult, the US economy showed strength in the third quarter as GDP expanded an annualized 4.9%, the most since the last quarter of 2021, above market forecast of 4.3% and a 2.1% expansion in the second quarter. Consumer spending rose 4%, the most since quarter 4 of 2021, led by consumption of housing and utilities and healthcare.
Right, and the other piece which was in news was the European Central Bank opted to maintain its record high interest rates at 4%, putting a halt to the 10 consecutive hikes that began in July of 2022. Decision comes amid concerns of persistent inflation, but the ECB acknowledged a recent slowdown with regard to inflation. This move reflects a delicate balancing act between combating inflation and addressing sluggish economic growth. Listen in to what Christine Lagarde had to say on this front.
Inflation dropped to 4.3% in September, almost a full percentage point lower than its August level. In the near term, it is likely to come down further as the sharp price increases in energy and food recorded in autumn 2022 will drop out of the yearly rates. September's decline was broad-based. Food price inflation slowed again, although it remains high by historical standards. In annual terms, energy prices fell by 4.6%, but most recently have risen again and become less predictable in view of the new geopolitical tensions. The risks to economic growth remain tilted to the downside. Growth could be lower if effects of monetary policy turn out stronger than expected. A weaker world economy would also weigh on growth. Russia's unjustified war against Ukraine and the tragic conflict triggered by the terrorist attacks on Israel are key sources of geopolitical risk.
All right, that's the word coming in from Christine Lagarde of ECB. But let's get a move on then and talk about numbers, because tech giant Amazon and Intel both saw an earnings beat for the third quarter. Robust sales in its retail unit and significant cost cuts aided Amazon's performance. but the company's cloud revenue is the department that missed street estimates. However, Amazon believes AI is the future of cloud. Similarly, Intel also beat Q3 expectations and shared a strong revenue growth guidance for the first time since 2020.
Right, rising tensions between the US and China could slow down the global supply chain. That's the warning coming in from the TSMC founder Morris Chang. The comments come just a few weeks after the US doubled down on AI import curbs from China. Taiwan Semiconductor Manufacturing Company is one of the biggest semiconductor makers in the world. It looks like countries are mad at each other. That worries me, he added.
Shifting focus then, former lawmaker Maria Corina Machado is formally declared as the victor of the Venezuelan opposition's weekend presidential primary. Meanwhile, in a shocking shift, Argentina's Sergio Massa took 37% of the vote of the presidential elections, forcing a runoff against Javier Milei.
Right, and onion prices have surged, doubling to 60 rupees per kg in just a week. Retailers anticipate further increases in the run-up to Diwali, citing reasons like rainfall inconsistency and insufficient output. My colleague Astha Chopra joining with more details on that one.
We are once again in the Dadar market after the onion prices have skyrocketed again. The wholesale prices of the onions have also skyrocketed and the retail price are also skyrocketed. Last week the prices were 30 rupees per kg and now it's 60 rupees per kg. The prices have been doubled because of the production in Karnataka and Andhra Pradesh are relatively lower. And the second factor is the rain. The rains are relatively lower as compared to the last 2 years. That's why because of the production and the insufficient rain, the farmers faced losses a lot. Also, according to the retailers, the price will continue to increase and the prices can go up to 80 to 100 rupees per kgs in the upcoming weeks, and it will continue to increase during Diwali and it will increase till December as well. Because of the production, the new Kharif crop which is coming from the southern states and also from Rajasthan will take a little time to gather in the markets, and that's why we will see the surge in the onion prices this time.
Well, that's on the current hike in onion prices. Thanks so much, Astha, for that. Let's move on then. And the income tax return filed by individual income taxpayers has increased by 90% in the last 9 years to 6.37 crore in annual year 2021-22. My colleague Bhavya Dua is here with more on this. Bhavya, take it away.
Right, so according to a recent report by Jefferies, India's personal tax filers are growing at a faster pace as compared to corporate taxpayers. Now, the share of individual taxpayers in the total direct taxes have surged to 50% in financial year 2021 as compared to 33% in financial year 2012. Now, personal income taxes as a proportion to the GDP forecast is expected to rise 3% in financial year 24 versus only 1.9% in financial year 2012. Now, personal income tax filers have grown at a 9% CAGR in financial year 2012 to 21 to 68 million, whereas corporate tax filers have seen a slower, which is only a 5% CAGR and have grown to 1 million in financial year 2021. Individual filers have risen at a faster pace amid corporate tax cuts during this period. Now, IT return filers are 6.3% of the total adult population of India, and only a third, which is like 23 million, of the filers are actually paying taxes according to this report. Salaries of these personal income taxpayers have risen by 16% CAGR in financial year 2012 to financial year 2021, and in this period have grown to 25 trillion rupees, whereas the income of businesses grew only by 13% during the same period and have reached 15 trillion rupees.
Right, thanks for those stats, Bhavya. But with that, we'll skip into a very short break. More on the other side, we'll look at Asian markets.
Hi there, welcome back. You're watching Market Cafe. This is ET Now. Let's move on with the show then. And ET Now learns that market regulator SEBI has proposed a new high-risk category for mutual funds and has reached out to AMFI for its feedback. SEBI has sought feedback on the structure of the proposed asset allocation, and sources tell ET Now that the proposal is in the consultation stage so far and no formal process has been adopted yet. Ankur Mishra is joining in with all of those exclusive details. Ankur, why is SEBI keen on this new category and what will be the implications of this move?
Yes, sources say that high-risk mutual funds are under consideration by the market regulator. As we understand that a letter has been written to industry body AMFI, and in that the proposed structure has been asked to the industry how it should be, what should be inclusions and exclusions, should there be any limit or not. All these questions have been posed to the industry. Now it is up to industry to reply to the market regulator. We understand that these discussions has happened in the past also, but it is like a first step which is taken by the regulator to test the waters, to understand that how high risk mutual funds may work, because we understand that regulator wants to give option to investors who can afford to take high risk, so that option should be there with the investors, because many times we have seen that these kind of investors go for unregistered influencers, mutual funds. So market regulator wants all these investors also to come under ambit of SEBI, regulated by SEBI, and hence an option like this is under consideration, in which there can be investment in high risk derivatives, in micro caps, in small caps, but only for those investors who understands it.
Right, thanks so much for that context, Ankur. But quickly moving on, Big Boy Reliance all set to deliver Q2 results. Street is expecting revenue growth of roughly 10%, net income to increase by 11%. What are the factors aiding this? Somit is going to talk to us about that. Also, talk to us about Reliance Jio. Will the subscriber base rise for the sixth time? Somit.
Well, Reliance Industries on a consolidated basis is expected to report a good set of numbers. If you see the company's revenue, they're expected to be higher around 10% on a sequential basis. The EBITDA is expected to increase by around 6% while net profit is expected to be higher by around 11%. Now, if you see segmental wise, it is the gas exploration segment that will lead the growth with around 23% sequential growth when it comes to the gas exploration segment EBITDA number. When it comes to the retail segment, the revenues and EBITDA are expected to be higher by around 5 to 6%, while the O2C segment EBITDA is expected to increase by around 5% on a sequential basis. Now, the growth in the O2C segment would be purely coming in from the refining segment, because it was the GRM strength that would lead to a higher growth. However, on the negative side, if you see, petrochemical margins were on the weaker side, while there was also maintenance shutdown, because of which there would be some negative impact on the O2C business. When it comes to the gas exploration business, that would see a 23% growth purely on the back of higher gas production and higher gas prices on a sequential basis, while the retail segment growth would be purely on the back of higher footfalls and store expansion that the company had done in the second quarter of FY24. Well, Reliance Jio, that is the telecom arm of Reliance Industries, that would see a muted set of numbers. Revenues are expected to be higher by only 3%. EBITDA is expected to be higher by 3.5%, while net profit would also report similar kind of growth on a sequential basis in the second quarter. ARPU number is expected to grow by around 1%, while subscriber base, now here we are seeing a growth for the sixth consecutive quarter, and the subscriber number in the second quarter is expected to come in at around 45.7 crore subscribers. Now, whatever growth that we are seeing on revenue and EBITDA front would be purely on the back of higher subscribers and sequentially higher ARPU. Now, sequentially higher ARPUs are expected to increase on improving subscriber mix and rising broadband subscribers on its total network. Apart from that, the key things to watch out for from Reliance Jio and Reliance Industries earning would be their margin outlook when it comes to refinery and the petrochemical business, the capital expenditure that they are planning towards the new energy business, what is the roadmap of the new energy business, and when it comes to the telecom business, it is the ARPU trajectory, what is the commentary, when are they planning to take a tariff hike, how has been the response when it comes to the Jio Bharat going forward, and what are the capital expenditure and 5G monetization plans going forward. These are the key things that one needs to keep an eye out for from Reliance Industries and Reliance Jio earnings.
All right, Somi, thanks for taking us through that. All eyes will be on Big Boy Reliance today when it reports its Q2 numbers later in the day. Moving on then, we've also got another set of earnings coming out today, and that's Maruti Suzuki, which is all geared up to declare its Q2 result. The top line and bottom line are expected to rise sharply on a sequential basis. Now, what else is the street penciling in, and what are the key factors that you need to keep an eye out for? Shrishti is joining in with all of those details. Shrishti.
A strong quarter is expected from Maruti Suzuki this time around. Why so? Because the company has been doing well when it comes to the volume growth, specifically on the back of their SUV sales. Some of their new model launches have gained traction. They have been the market leader in the SUV segment now, and along with that, when it comes to the pricing, they have increased the prices and have been offering some discounts in their lower end models as well. So that also pushed the volumes for the company this time around, wherein the volume saw a jump of 7% on a YY basis, and sequentially they were up 11%. So all these factors will come into play when it comes to the overall number performance. On to the revenue front, we are expecting a jump of 15.5%. 37,349 crores is the estimate there. EBITDA is expected to be up 38% YY at 4,113 crores, and even the margins are expected to be up from 9.2% in Q1 FY24 to 11% this time around, and this number will be the key to watch. And lastly, on to the profit figure, a jump of 24.5% is what we are expecting. 3,095 crores is the expectation there, but definitely on the back of a better product mix and also from the Japanese yen depreciation. So both of these benefits will also kick in for Maruti Suzuki, but the key to watch will be the management commentary onto the outlook going ahead, because post the festive season, how the company and the leader in this segment is seeing the demand trend shaping up, as well as what is their outlook on production as well. So we will be monitoring that.
Right, thanks for that, Srishti. But sticking with Srishti and earnings, Dr. Reddy's and Cipla are both slated to report Q2 earnings. Srishti, talk to us about those as well, please.
Well, we are expecting a decent set from both the pharma majors. This time, the US sales is expected to show a single-digit decline on a sequential basis, majorly on the back of seasonality. The India sales were quite tepid, but their different brands and products are expected to support the earnings. Firstly, let's start with Cipla then. On a sequential basis, we are expecting a single-digit growth across all the parameters, but a double-digit growth expected on a YY basis. Talking about Cipla, another steady quarter because the US revenue is expected at $215 million, and majorly the push could be aided by the sales of G Revlimid. For the India sales, we are expecting a jump of 8 to 11% on a YY basis, and when it comes to their margins, that could see a jump or also a flattish kind of a growth on a sequential basis, because same year last quarter it was at 22.3%. 23.7% is what we are expecting, and just a 10 basis point jump on a sequential basis. That could be on the back of the price hike, input and the freight cost normalizations. But the key to watch will definitely be the management commentary on the stake sale, as well as whether they stick to their FY24 growth guidance or not. So we will be watching out for that. But when it comes to Dr. Reddy's, then G Revlimid sales was actually quite subdued on a sequential basis. That could actually not support the US sales. We are expecting a 3% quarter-on-quarter decline on that front. Other than that, the India sales expected to be tepid at 5% YY growth on that front. The revenue is expected to be flat on a sequential basis. EBITDA expected at 1,891 crores, and even the margins can see a drop from 30.4% in Q1 FY24 to 27.9% this time around. And lastly, onto the profit figure, a 11% decline is what we are expecting, and 1,246 crores is the estimate over there. But the key to watch will be the next key launches to be done by the company in the next 12 to 5 months, their update on the filings and the approval and launches in China, and how's the outlook of the G Revlimid sales. So that's the outlook, but amongst the two, Cipla seem to be fairly better pleased at now.
Right, thanks for that, Srishti. Also, SBI Life coming out with its Q2 numbers. APE expected to be at 5,050 crore, up 29% year over year. VNB expected around the 1450 crore mark, which is up 17% year over year. VNB margins at 28.8%, which is flat sequentially. But versus the year over year number, which was at 31.6%, it's a bit of a decline. So we will see declines there. With regard to key monitorables as well, VNB margins currently as well as trajectory going forward will hold the key. Also, how the product mix is really evolving for SBI Life will be important. How non-par is growing, whether the distribution the different distribution methods and categories, how the distribution mix is going to really change and evolve is also going to hold the key. So some shift in product as well as distribution mix, trends in non-par are going to hold the key because those will shape up margins going forward. All of that on SBI Life, of course, expectations on the back of the numbers today.
Absolutely, a whole host of earnings that will hit our markets this morning, Harsh. Lots of stocks will also be in focus on the back of that. Well, it's time to slip into a short break on this edition of Market Cafe. You don't go anywhere, we'll be right back.
Welcome back. Thanks for staying tuned to Market Cafe. Quickly moving on as we kick off a new series today for the month of November. How has the market performed in November over the past decade or so? Ansh takes us through all of that data. Ansh, take it away.
Right, so this is a study based on seasonality. So we have collected data for the month of November of over last 10 years, and as per that, many major indices have delivered positive return on an average basis. But talking about Nifty first, index has delivered a positive 1.2% average return in the month of November, but it has been positive only for 5 out of 10 Novembers, showing a 50% probability of being positive. But if we talk about Nifty mid cap, here we are saying it has been positive for 8 out of 10 November, giving an average return of over 2% and highest return of over 15%. Now let's talk about the sectoral indices. As you can see in the table as well, let's get the table in the screen. Banking indices have been the top performer on the average basis. If we see PSU Bank, Nifty Bank, Financials, Private, all have given over 3% average return in the month of November for last 10 years. Further, talking about indices, let's take a look over indices that have been positive for more than 7 Novembers in last 10 years. Here we are seeing Nifty Bank and Nifty Real Estate actually giving a return of 3.6 and 2.3%. Now on the contrary side, index which has given negative for more than 7 Novembers in last 10 years is Nifty Pharma Index, which has been down for almost 2% on average basis. Lastly, let's check F&O stocks that have delivered positive return in over 7 Novembers. Here we see Tata Communication, SBI, Persistent, Biocon all delivering average return of over 5%, followed by Tech Mahindra and Torrent Pharma. So keep an eye on the stocks and especially on mid-cap index, which could act as a good buying opportunity for any corrections.
All right, thanks Ansh for taking us through that very interesting set of data you've collated there for us. But let's also talk about what the F&O setup for today is looking like. We're kicking off a new series and implied open is still not indicating crossing 19,000 on the Nifty. So what's the setup looking like for today?
Sure. So actually there are many negatives which happened yesterday. For example, Nifty gave a decisive breakdown from its psychological level of 19,000 mark. It touched 3-month low. The index also registered longest selling streak in over 7 months. Yesterday, as you said, that it was an F&O expiry. So where October series registered biggest series decline in over a year and biggest October month series decline in over 5 years. Also, as today is the first session of the November series. Speaking of which, if we check the historical trend, November series have been positive in 4 out of 5 Novembers, giving an average move of more than 4.5% in last 5 years. Whether November will deliver positive return in this series or not, only coming few sessions can give us some idea about it. Now let's see what happened in F&O segment. Short builder was seen in Nifty futures with open interest jumping by 56%, showing bearishness. On option fund, we saw call writing at 19,000 strike, indicating strong resistance around here. Now let's shift our focus to what FIS did. They covered 30,000 long, they added 29,000 short contract. So net to net, we are seeing a position of 60,000 contracts being built up on downside. Now this is huge. This is the reason why FI total short positions have actually jumped from 74% to 89%, a level which has not been seen for a very long time. So in a nutshell, F&O data continues to be negative, plus charts also seems negative till Nifty stays below 19,000 mark on closing basis.
Right, thanks for all of that, Ansh. Quickly moving on, Shriram Finance delivered Q2 numbers, good set of numbers, asset quality also improving sequentially. Vamakshi, talk to us about Shriram Finance.
Well, yes, a good set of numbers has been reported by Shriram Finance in the second quarter. Yes, the net interest income actually came in higher than what we were expecting, and that is mainly because the net interest margin has actually expanded by almost 60 basis points versus the company's own estimate of a moderate decline expected of nearly 5 to 6 basis points on a sequential basis. Apart from that, when we look at the pre-provisioning operating profit, that also saw a jump of nearly 16% coming in, much higher than what we were expecting, but the net profit has actually come in line with our expectations. So overall, it does seem like a good set of numbers, but what is important to monitor is the kind of growth that they've posted in their AUM. They've grown by almost 19%, crossing that 2 lakh crore mark on the AUM. And apart from that, when we talk about the asset quality, that has also improved as well. GNPA has improved by nearly 24 basis points sequentially, while net NNPA has also improved by nearly 16 basis points. Largely, the management had initially indicated for an AUM growth of almost 15%, but nearly 18 to 20% growth is a good indication for the rest of the year, is what the management has said. Not just that, they also believe that the NIMs could be in the range of 8.5 to 9% as compared to what the management had guided earlier, which was between 8.2 to 8.7%. Apart from that, the management also reiterated that the share of unsecured personal loans will be capped at 8% given concerns around personal loans as well. And apart from that, they also highlighted that the return on equity target will be in the range of nearly 15 to 18% after factoring in the increase in debt to equity ratio, and in fact ROE is expected to reach by nearly 16% in the next year and then towards 18%. So all in all, a good set of numbers coming in from Shriram Finance. The management also appears to be quite positive, and that is the reason you should keep an eye out for this counter.
Absolutely, Vamakshi. Thanks so much for taking us through that. Good show coming in for Shriram Finance. So that stock will be in focus on the back of those numbers. But with that, we're completely out of time on this edition of Market Cafe. We bid you goodbye for the week. You don't go anywhere. The market will take all the action ahead.